Joined now by Gqubule and Peter Attard Montalto. Gentlemen, thank you very much indeed for joining us. Peter, if I may just start with you. Does this change in any way the direction in which our economy is growing? Many people have made the point already that there's still no economic plan to grow the economy and get more revenue for government.
Good afternoon, Stephen. Well, I think people always misinterpret an MTBPS as somehow this thing that delivers growth. There is a very strong agenda already going on, which was in the speech from Operation Vulindlela on electricity, on logistics in particular. But this is really just about fiscal firefighting, and that's what it delivered somewhat on. But no, this separate agenda is ongoing. It's not complete. There are many other things that have to happen around things like labour market reform, around things beyond network industries, certainly. And that's, I think, ultimately what we'll be waiting for, probably without much success, to come out in SONA or after that, after the election next year.
Duma, for many people, they've been very worried about cuts in social services. So yes, the SRD grant, the 350 grant, stays for another year. It's still only 350 rand, and inflation, of course, food price inflation particularly, fairly high. What impact is this and the plans announced today going to have on the lives of ordinary people?
Yes, I think we're excited that it has been extended for another year, but the government can't kick this can down the road forever. The Finance Minister was saying the government hasn't made a decision on the basic income grant. So meanwhile, this 350 was introduced 3 years ago, and there's been record inflation over this period. So the purchasing power of the 350 has declined substantially. And at the same time, the poverty line is now 760 rands a month. And then I was also excited to see there's a successful program, the Presidential Employment Stimulus, that is retained for another year. But he did say that it seems like they'll take money from the Expanded Public Works Program and the Community Works Program. Now, those three programs, they've got a budget in this year of about 17 billion rands, and they create 1.8 million full, work opportunities and 900,000 full-time equivalent jobs. So what I would like to see is, I've been talking to some of the people who are involved in this, that what I would like to see is that we should amalgamate these three programs, create a new institution, a quasi-public institution that can expand these programs of direct job creation and perhaps extend the funding towards these programs to create so on the one side, the SRD should give way to a basic income grant, and on the other side, the Presidential Employment Stimulus, when you amalgamate the job public employment programs, they should give way to an institution that can set up a job guarantee for South Africans.
Peter, would that work? I mean, would that help stimulate the economy? I'm reminded, of course, that once again we've had a promise by someone in government that they'll cut down and rationalise the number of government departments. I don't know if this would go against that.
Well, we see that promise, but no detail still. I mean, I think the big thing is going to be after the election, the president will sit there and suddenly need to give a load of deputy ministerships to a load of new, smaller parties. So I'm a little sceptical that comes through, but certainly some slashing of departments can happen after the election, but nothing in the MTBPS here at the moment. I think the big problem with the MTBPS is we don't really know where there are 100 billion of cuts coming from next year. There are 67 billion of net cuts because they're giving some more money in particular to health and education, but they are taking 100 billion from somewhere else, and I think we need to think very carefully about where that is happening. We've seen in the last couple of years, of course, cuts that are pushed down, anonymous cuts as we call, that are pushed down into the formula for local government and provinces, can create huge problems in terms of service delivery. And I think this is going to be the challenge of realizing some of the cuts are in the budget when we get to, in the MTBPS, when we get to the budget next year, and the reality of these maybe actually hit home. But Treasury has found 21 billion under the carpet for this year, but basically stuff that wasn't being spent, that's been spent very inefficiently. And I think that does show the amount of slack in the system, that these cuts can come through with relatively limited impact on growth overall.
I mean, there always seems to be a little bit of money stashed under the carpet somewhere. A lot of talk before this about the Reserve Bank's gold and foreign exchange contingency reserve. It doesn't seem, Peter, that that's going to be tapped. Is that the right decision, not to tap that?
Well, absolutely. I mean, I think there were some completely mad ideas out there before this MTBPS that you should use this somehow to fund current expenditure, which is not what this is all about at all. I think the SARB is going to very much and is ensuring that if this is eventually used, it will only be used, for instance, for bond redemptions. We have the famous R186 which is redeeming in 3 years 125 billion each. This should be a classic use where the SARB may well allow use of this fund that will prevent there being cuts basically elsewhere in the government to be able to afford the redemption of that bond. So I think it will end up being used, will be in a calm way after the election once the dust has settled, but certainly not for current expenditure, which needs to be sustainable in its own right.
Peter, you're Duma. Do you agree with that? I mean, would it be mad to tap that fund?
No, I don't think it would be mad. But first of all, I have to say, like I heard all the responses from people, in Parliament. We haven't grown. Our GDP per capita in 2022 was lower than 2007. We haven't grown for 15 years, and we're forecast to have another 3 years of no growth in GDP per capita, and people are going around in circles. This budget doesn't address the growth, so we have to come up with some innovative solution, perhaps an off-balance sheet proposals. Everything must be on the table. We need to come with some way of stimulating this economy, and there are various. Let me give you an example. During COVID, the government created 60 billion rands out of thin air when it ran down the UIF surplus, because in 2016, people had started noticing this accumulation of the surplus for no reason. And COVID, they spent it for 13.8 million people. But now, the surplus there is still about 110 billion forecast in the budget. So I'm just saying that everything must be on the table. These are not mad ideas. We are in a desperate situation, and we can't be going around in circles around the same issue and promising South Africans for 10 years. I looked in the budget. The word structural reform first appeared in 2012. And for 10 years, 11 years, we've been repeating the same broken record story, and nothing comes of them. So why can't we provide some kind of hope to South Africans? Because this path of 1.4% for the next 3 years, in terms, you just multiply, the multiplier according to me is about 0.9, and you can work out how many jobs will be created over the next 3 years. Unemployment will increase by about 1.5 million over this MTEF, and we can't continue like this, Stephen. Yeah.
I mean, Peter, Duma must be correct. We can't continue like this. The one thing that we could, if we did suddenly find a bit more money under the carpet, would be to spend that on infrastructure. Transnet and Eskom, I suppose, would be where you would start.
Well, the key announcement today is to try and jumpstart the infrastructure spending off balance sheet, basically, which is the correct thing to do to bring in private sector money through private sector participation. And that's the new infrastructure agency will be set up. I think that's actually a mission of failure. We've seen, particularly Minister Ramaphosa, who's been sort of running around for the last 5 years before he became electricity minister, failing basically to make this infrastructure thing work. And Treasury is now trying to take this over and actually deliver something, given the huge amounts of money the private sector does want to invest into infrastructure. So I think that's certainly a positive announcement. I think the bigger problem, though, here is that there is a lot of reform happening, but it's very long. The reforms that are going on through the National Logistics Council, Crisis Committee rather, and through the Presidential Roadmap on Logistics are great, but they're going to take a good 5 years before they properly turn around volumes and actually have an impact. And we, as a result, are having to wait, in terms of being able to spend more money when the tax base is expanded on what the country needs to spend it on in terms of a social wage. But that's ultimately the order things going. We need a tax first to pay for this and after reforms bed in, as opposed to somehow being able to spend the money up front.
Duma, the Finance Minister talking about local government and talking specifically about what we see all around us, which is basically in middle-class areas, a solar panel wherever you look. And what that means is that municipalities are no longer getting revenue from the on-selling of electricity. Many of us buy electricity from municipalities. If you're no longer doing that and generating it yourself, where does the council get their money? He talks about rekindling a culture of paying for services rendered. We've been talking about this for ages. Non-payment has become a huge issue. The Minister may talk about changing what's happening in councils, but actually making it happen looks almost impossible.
Stephen, as I've said, before, is that there's an assumption in this budget that Eskom, Transnet, and the local authorities can self-finance themselves. And as you correctly say, their funding sources are dwindling. And I think the budget should eventually make some kind of provision for the spending, because our cities, our municipalities are collapsing throughout the country. Let me just give you an example. City of Joburg, the largest one, they've got an infrastructure backlog of 300 billion. The budget currently for infrastructure is 7 billion. So the City of Joburg, the largest one, in terms of a capacity to levy people, it doesn't raise nearly enough what it needs to address to the infrastructure backlogs. So as I've been saying earlier, that we need some kind of innovative off-balance sheet, on-balance sheet solutions to get this country going. If you've been to the city of Joburg, Durban, it is a dirty, filthy slum. And as I said, we can't continue like this, because what Peter is saying is that we must wait for these structural reforms. Keynes, the great economist, said in the long run we are all dead. In the medium term, while we wait for these structural reforms, we will not have a country. So we have to offer something better to South Africans than telling them to wait for these structural reforms to work. And when they haven't worked for 10 years, I think it's disrespectful to the people of South Africa.
Peter, to sort of build slightly on Duma's point there are elections next year, and you would have thought that maybe there'll be something that would suggest this would be a sort of an elections mini-budget, and it's not that at all.
Well, there's a little bit of slack in here, which means I think there can be some baubles in February, some small ones, a few 100 million here and there. But no, there is basically no space for anything particularly interesting. I think some of the reallocations will be maybe outlined with the election in mind into the budget in February. The choices that were made today, but we've seen the ANC, trying to manage the message. We had the completely bizarre spectacle of the Secretary General having a public press conference whilst even before the speech today, which I think shows their desire, obviously, to manage the message given the election and sort of frame these as sensible cuts overall. But there is a big risk here in terms of trying to push things too far. The bond markets are quite fractious at the moment. We've seen a lot of volatility in terms of the spread between what you have to pay to buy and sell a bond. We've seen some problems in getting some types of debt away, particularly the floating rate notes that Treasury is trying to issue. This is not a happy situation in the markets, but I think this is the point. We might all well be dead in the long term, but we can also be all dead in the short term if we get run over by the bond market.
And Peter, very quickly, and I will give the last word to Duma in a moment, but one of the things that we should not forget as South Africa is how dependent we are on other countries, and particularly Chinese demand. And one of the main reasons we're in this specific position is that there just isn't as much demand for our commodities. Yes, Transnet is a problem getting our platinum from Northwest to the right port, but the fact is that Chinese demand, the conflict in Ukraine, the conflict in the Middle East, all of these could have huge impacts on our economy going forward, and we have no control over that whatsoever.
Well, indeed, but it's also sort of worse than that. You have the downside of all that global risk coming in terms of commodity demand, but none of the upside, and that's what we've seen in the last 2 years. Transnet is basically responsible for South Africa not taking part, in the additional coal that could have been exported as a result of the Ukraine war, etc. And so there is this really odd risk and oddity around the current account and around trade, which will be corrected in the long term as some of the logistics reforms bed in. But again, it's going to be quite a long time. Transnet thinks it can turn around in its turnaround plan volumes, increasing by about 15% next year. I think that's really, really, really hard to see. It's going to be another 2 or 3 years before we really see that, and that's going to be the risk that we still see into being able to realise some additional revenue upside in the long term for the fiscus to spend on the stuff that we actually need to have it spent on in South Africa.
Duma, a last word from you. The VIP protection unit's getting another 52 million rand. What message does that send to South Africa?
I just think I was talking earlier on to Dudu. It's about the warped priorities that we have as a country. There's a disconnect between the people who are ruling us and the people they're supposed to be ruling over. And I just think that is just another symptom of the disconnect between our politicians and the person on the street here.
Gqubule, thank you very much indeed. He, of course, is a researcher at the Social Policy Initiative. My thanks also to Peter Attard Montalto, Managing Director at Krutham